Good morning, traders. Paul here with GammaEdge. Today is Friday, the 3rd of March. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. So short term, we have a new, what we call trigger day. I know we're using terminology here that most of you are not familiar with. I'll explain it in a little bit. It's called Tag Combo 8. You'll see what the significance of that is here momentarily. We also have the downward railroad track pattern. Again, you will see that here coming up. It's turning off. And when it's turning off, that means it's potentially going to turn around and go north. Today, if we have a strong day, may signal a new trigger day up. And this would be Tag Combo 10. And again, you will see that here in the next couple slides. On a longer term scale, the ribbon, which is that colorful ribbon that we always present, it is inverted, it's bearish, and this is telling us more often than not we should be selling the rips, not necessarily getting over our ski tips to the long side. But on a shorter term basis, we can certainly play these pushes upward in an overall longer term downtrend, so just be aware of that. Market breadth yesterday, we used a 52-week new high, new low indicator. We had the new lows outpacing the new highs, 2 consecutive days. The majority of 2023 has been positive, where the new highs have outpaced the new lows, but we are seeing more and more of the new lows creeping in. Now, we did have a reversal day yesterday, so today will be interesting to see how that pans out. For the 0 DTE folks, the 3950 and 4000 strikes are really the sensitive points for today. If we move above 4000, we'll be transitioning a lot of in-the-money puts to out-of-the-money status. And at the same time, there's a lot of out-of-the-money calls at 4000, which will now become in the money. And that has a pretty significant impact. I want everyone to think through that. We have closed within or the top of all of our transition ranges. This is important because what this is showing is that not only is spot price pushing up, that we're in a launching pad to go further north. We're almost entering the call-dominated gamma side of the equation. And typically when we step above what we call P-trans, which is that strike at which it and all the strikes above have a net positive gamma, we tend to get captured and volatility comes out. So this is an important transition area that we watch, and we think we're in a good position. Doesn't mean we're going to continue. It just means we're in a good position. We are starting to see the out-of-the-money call speculation begin to dominate the in-the-money puts. Now, I want you to think about that. Those in-the-money puts have a delta of greater than 50, and now we're starting to see the out-of-the-money, which has a delta of less than 50, start to populate and dominate those in-the-money puts. This is important. We believe this is critical to move north up the strike chain, and until we see more of this, we are cautionary, but today does set the stage for adding to this and increasing our bullish view of the markets, at least on the short term. We do think that loss of that 3965 area, we talked about this yesterday, we think it can be played to the downside with the 3950 as a first target and then 3900 as a second downward target. We may not get down to 3,900 just because of the action yesterday. We are seeing some support right around that 3,925 area. So just think about that. If we do get some volatility today and push south, you might be able to play some very, very short intraday scalps. Conversely, a push above the 3,975 level with a possible retest from above. We always like to see these checkbacks or these reversion backs to these key levels. If we can hold that from above, this could be played long, and we think a first target would be crossing that 4,000, 4,005 range, and then second targets up towards that 4020, 4025. We do believe everyone should get in motion. We don't think, though, that this is a substitute for prudent risk management. If anything, this transitory period is where risk is the highest because failure is more prone until the trend develops. So don't get out over your ski tips. We advise everybody in the Discord progressive exposure, base hits, and we would want everybody to do that. The market model, this is the composite view. You can see yesterday we had a good strong reversal. The bolded white line here is the short-term cumulative tick. It's not averaged. It's a real view of market sentiment, and clearly from about 1:30 onward there was buying in the markets. Now this pattern right here is the railroad track down pattern that we'll talk about. I'll explain that here in a little bit more. And then you can see that the longer term ribbon is still clearly in a downtrend. It's going to take several days to reverse above that. That being said, there is the opportunity to play the upside here, and we think this is something that everybody should watch and potentially do. Now we have extensively back tested this, and so just looking at over the past week and a few days, you know, we've had some down days where the CT has closed below the close of the prior day, and you can see what that means. We had one up day, it did fail, right? So just be aware, this is an early signal, it's prone to failure. This is why risk management is incredibly important. But then, you know, as you get your continuation down days, that is one thing, but now we've got a new, what we call trigger update, and this is this tag combo 8. So what is tag combo 8? Tag combo 8 is a scenario where the CT closes greater than the previous day and buy on the first day of the signal. So that's what this is, that's what this is. So this is indicating buy on the first day of the signal. And from a back-tested view, and this is with our partnership with EdgeRater, you can tell that it has a very, very good win rate. Your drawdowns, worst case, these are the right tail, 95 percentile drawdowns are pretty limited, so size accordingly, knowing that on average, these are average for the 95% tail, that you could see some drawdowns here. But with this win rate, your first upside target would be a little over 1%. So today's goal, if this continues, would be to take those trades and move upward. Taking a look at what we call that railroad track, it's another short-term indicator, and you can see it's been in this downtrend. So the slopes of these things are down. It did turn off here, and then we resumed the downtrend. And now we're in a situation where it's turned off. It could reverse downward, or we could now move up. If we move up, today will be a trigger day for this. As I said, this is called a tag combo 10. The tag combo 10, compared to the tag combo 8 that you see here, tag combo 10 basically is true if the short-term MAs are railroad track upward, and that's where basically the bolded one leads the charge up, and the other ones kind of follow as they go. Buy on the first day of the signal. A little better performance, as you can see. So I would urge everyone to think about getting some base hits. You can use this market model to start increasing your exposure and get some buffer underneath you to the long side. It also can help you gain confidence in learning our system and how we do what we do. Taking a look at the gamma levels, so the first thing obviously is the green jumps off the page at you. We're seeing deltas move up on both the SPX PM settled, which is here on the left, and then the combo complex, which is here on the right. We do have a few changes going on here, but they are relatively minor. Everything is bullish. We like that. Just pay attention to what's happening over here. The combo complex is not changing. Structure is intact. Volatility is dropping. We like all of those things, and so this has given us some confidence to start increasing our long exposure. Taking a look at the PM complex, the transition is pretty solid. You can see we closed right at the top of transition, as I indicated in the opening. We're starting to see, remember, these are in the money puts above us, and we're starting to see the deltas appear here, turn green. That means the out of the money call speculation is starting to dominate in the money puts. This is significant. And we are starting to see some pretty significant levels of calls go in. This is the first step to a transition, and want everyone to pay attention to this. And then to the downside, we're also starting to see basically the out of the money puts get closed, and you'll actually see this. It'll be very, very evident in the combo complex, which is a slide that's coming up. The takeaway here, we do have increasing bullishness, and watch the levels to the downside, watch the levels to the upside. Taking a look at the charm estimates, as I said, 4,000 is a strike to pay attention to. To the upside, 3,950 is a strike to the downside. Remember, spot price not moving. This is time. This is only time. So as we march through time, Out of the money calls are going to limit towards 0. In the money calls are going to limit towards 1. In the money puts are limiting towards -1. Out of the money puts are going to collapse towards 0. It's a balancing act. This view is a little different than what we've been presenting here over the last couple days. Just want to show you that the net charm is comprised of the algebraic summation of these things, and so you can see actually what is going on. We do want everyone to pay attention. 3950, 75, 4000 are all key strikes, and will matter. If we do take that 4,000 level, I want everybody to think through what's going to happen as we start capturing these out of the money calls, and basically we lose the in the money puts, pushing it over to an in or out of the money status on this side as price moves above 4,000. It's a very critical thing. I want everyone to pay attention to that. Also think about if we lose 3950 and move down, what happens to the structure. It's very visible here. I'm not going to belabor the point, but this is a very eye-opening, very clear explanation of critical levels within the structure, and it may help you take trades one direction or the other. The 0 DTE, basically we're in pretty good shape. You can see that we do have a slight amount for today. This is the 0 DTE. We have a slight amount of call dominance coming off. It's not ideal for the bulls. Call speculators need to step up and continue to increase their long exposure here. Now remember, this is what's coming off. Why that's important is that as we continue to see in the money puts come off, that just by default will expose, as long as people are not adding puts. And why would you add in the money puts? You would tend to add out of the money puts. This tends to open up the door for the out of the money call speculators to step up. So as price moves up, you can see potentially that we could add calls to this structure, but we're early. I want everyone to realize that we're early. To the downside, the put speculation is getting thinner. What we mean by that is these numbers are dropping. They're getting more positive or less negative, and we're starting to see some green appear here. That's good. Again, look where we are in transition. We're above it. We've got some key levels to pay attention to here for the 0 DTE as we go through the day. The gamma levels will magnify, of course, as we get closer and closer to expiry. So again, just pay attention to these key levels and what could be magnified as you go up and down the strike chain. Taking a look at the 1 DTE, we're right in the middle of transition. Got a couple nodes here to pay attention to. This is Monday's view, right? This is our crystal ball into Monday. Again, look and see, we do have in the money puts coming off the structure. We also, though, at the bottom here, we're seeing the out of the money puts come off the structure. So we are early. We are starting to see more and more green appear. That's good, but we want to see more red appear on both sides, which will be favorable to the bulls, right? Taking a look into next week, which we think is, important just to look at the overall structures. 4025 is an upside target, 3900 to the downside. Can't discount it, but the transition is intact. You can see the out of the money put speculators are still in control though, right? Now think about that. They are not scheduled to release next week to come off, and until later in the week most likely. If you click through these, which I did this morning as I was building this, there is a lot of this later in the week. Early in the week, not so much. In fact, we have a little bit of weakness earlier in the week next week that I'll not get into today. That being said, we do like to see the put speculators come off. This will be vaporized by next Friday. The sequencing will matter. What we do like to see is this. We do like to see the calls go in. This is good. These are short term. We've got the call open interest at 4,000 here for next week too. That's interesting because that can help us move north if we don't get there today by removing some of that delta and some of that gamma that's present there. The key thing that we're watching for next week is this 4070, 4075 area. As this in the money put structure, this will be coming off by the end of the week. If we do see calls start to populate up here, that'll be a good sign. So that's what we're looking for. Again, though, Watch this 4025, 4000, 3900 levels. Look where we are within the overall transition and look at just the balance of deltas here. I think are going to be very, very important as we progress and as we sequence through next week. Finally, pretty simple chart here. It's pretty clear what's happening. Compared to yesterday, and I would urge everyone to go back to yesterday's either video or handout, we've had a huge improvement in what we're seeing down here. These are now in the money calls that are dominating, well, with the exception is 3925. And you can see we're at the top of transition. This is the combo complex. This is the mothership, right? 17,000 contracts sitting here, or 17 million, excuse me, contracts sitting here. Why this is important is that sitting at the top of transition, and this structure is solid for the downside. This is a major change from where we were yesterday. So the out of the money put speculators have all but vaporized with the exception here. What we're not seeing is a huge improvement on the out of the money call speculators. This tells us we are early. Do not get out over your skis yet. This could fail. But that being said, we have a great structure below us. And we're pretty excited about this. So if we do pull back, we do think this 3925 zone will be a holding area. We don't see 3900 or certainly anything below 3900. We do think that 4020, 4025 zone would be a good place to go to. If we can get up there, if we can cross the 4000 strike, we do see the gammas being able to support us. And this double structure right here is generally something that we've parked within in prior times that this has occurred. If we can get up into this area, we may see this as a holding area as the sign changes afforded as you go from 4020 to 4025 in deltas and then back up here. Could be a low exposure area for deltas. So just be aware of that. We would play a fly here or something in that area that would give us some ability to magnify it. Maybe a diagonal or something up in that area to take advantage of that and being able to park there. Relatively short dated, but nevertheless, take a look at that. And then finally, last slide, 3900 left goalpost, 4200 right goalpost. These are the JPM end of month short calls at 4065. We do see them as a barrier right now. We don't think we're going to get much above that. Highlighting this transition below 3965. If we lose this, it's very, very possible we could start testing these lower areas. We would be short on loss of 3965 for an intraday scalp. On the other hand, if we can get above 3975 and test it and hold, we would be long. And we think that sets up the potential to move up into this area, which would be a short-term long type of setup structure. So with that, I will leave you. If you have any questions or comments or just would like to kick the tires, come into GammaEdge.us. Upper right-hand corner of that web page is a pricing tab. Pick your plan, fill out the blanks, come on in, see us, 14-day free trial, all the tools turned on, and a great group of traders and educators, and we have just a great time in the voice channel and in the with the tools. Follow us on Twitter, please, GammaEdges with an S, and here on YouTube. Two things. First of all, if you like today's content, please smash that like button. It lets me know that we're providing content that you want to see. And then two, subscribe, because when you subscribe, you get notified when Taylor, myself, and Michael post videos, and you get to see what we're seeing. So with that, I bid you farewell. Hope to see everyone in the Discord. Thanks, everyone.